Okay, hello traders, this is Napan here, founder of Master of Markets Illustrates Conference and the Traders Open Day. So today's topic on live trading session where we go live into the markets, it's going to be the ID trend indicator. Okay, what do we mean by that? ID basically refers to intraday trend indicator. What is the one most truest trend indicator on an intraday time frame? So let's take a look at that. Let me just bring my charts up over here and let me just share my screen very quickly. So here you go. So let me just check here on, let's first start with the daily time frame, and then we'll go on to the shorter time frames. Now, you see, before we go on to talk about the trend indicator, two concepts I have to give you first. So first point is that for intraday, first of all, you need to start off by understanding a OHLC bar or a candlestick, whichever it is, it doesn't matter. Because remember that a candlestick is just covering up this open and close, and that becomes a candlestick. But imagine if we just kept it to a OHLC bar. You can see that over here, there's two parts to this bar. One, you can see a smaller portion, which we can call it the smaller range from the open. And then the other portion, which is the bigger range from the open. Okay, so two portions to a bar all the time. As you can see, whichever bar that you look at, you see there's a smaller portion, and then there's a bigger portion from the open. Smaller portion, bigger portion from the open. Even if you look at a seller bar, you can see that from the open, this was more or less the smaller portion, this is the bigger. Sometimes it's quite near, right? But it doesn't happen very often. You can see in this seller bar here, this is the smaller portion, this is the bigger portion from the open. Okay, so that's the first part that you do need to know. The smaller range from the open and the bigger range from the open. The smaller range from the open was popularized by Toby Crable, a very big hedge fund billionaire trader, as the stretch. Okay, so that's the smaller range from the open, and it's known as the stretch. Okay, in other words, all it means is that another definition for the stretch, other than calling it smaller range from the open, we call it the nearest extreme to the open. Nearest extreme to the open. For example, today, the nearest extreme to the open is to the downside. So that's the first thing you need to know in terms of the stretch, or the bro, as one of our Vedanta elite members called it. All right, bigger range from the open, or the stretch, the smaller range from the open. The second point from them, which is how it leads up to the true trend indicator. Now imagine if I were to draw an open line, and I drew it in blue, okay, every single day. Now, as the bar stretches away from the open and moves past its average stretch number, if you find out over the last 10 days, the average stretch number, the nearest extreme to the open is, let's say, is 10 pips. And if it went past that, more or less on a high probability level, you do know that this portion here, from this open onwards, this portion here of the bar that is forming will probably become your BRO for the day. The other side will probably become the stretch. Okay, so let's take a look at this. So it's the second point we're looking at, isn't it? So let's put it all into context. You see, if I were to remove, let me just remove the moving averages so that it's get a bit more clearer here. So let me just remove that. Okay, good. So you see this blue line, what I said, that's the open. Okay, that's the opening price. Okay, and then this green and red line is the equidistant stretch line from the open. Okay, so as it stretches more and more from the open, you see I can draw OHLC bar just by looking at this. As it stretches more and more from the open, so this one here to the low side, it went down like that, and then from here, all these bars, I can just summarize it as the bigger portion. So this part here upwards from the open is this portion here, And this part from the open is this portion here. Okay. So that's how you segregate a bar into two parts. Now, this makes absolute sense. You should definitely go and reflect on this and integrate it into your trading strategies. And why do we say that your truest trend indicator on an intraday time frame is actually how far it runs from the open? Now, why is that? Now, imagine now if I go to the daily time frame, if I take the ATR, okay, which is ATR is the average true range, which is 72 pips, let's say. All right. Now let's see from the open, it's already done 73 pips today, right? So you and I know more or less the range has been formed. And secondly, highly probably the opposite side is the stretch for the day and that low won't be taken out. So therefore, now as I mentioned to you, why we'll be using that, which is what I mentioned, the move from the open, okay? If the move from the open in this case is 73 pips, and that is already more or less your range formed, you know that the stretch has been formed to the opposite side. That's how you can use this. So firstly, we looked at the BRO and the stretch, what they mean. Secondly, we are looking at why this is important. And I've told you that the more further it moves away from the open is your true trend indicator, because it will already tell you where the stretch has formed and whether your range has formed for the day. The third thing is, how can you use this? The first thing you can do to gain confidence in this and then to start thinking on how you can use this, the first question you got to ask yourself is that how many times, write this question down, how many times when it moves past the stretch line, whichever stretch line, the green or the red, does it also form its bigger range from the open? How many times when it moves past the stretch line, does it also form its BRO in that direction? Okay. So for example, if you take a look over here, in this instance, it took out the stretch line and it also formed this BRO to that one as well. Okay, so this one trade sample and is 1 out of 1 so far. But in here, you can see it took out the stretch line, but it formed the BRO to the opposite. So if you consider this two trade samples, is only 1 out of 2. Over here, you can start to see that it took it out to here, but the BRO was formed to the upside. So still 1 out of 3, right? So you keep collecting it like that, and you will start to see. You see, in this instance, it was much more straightforward, right? It took out the stretch line and it moved this BRO to there. So now it's 2 out of 4, and then so on and so forth. So keep doing that. You will start to see that even if you did get 60% or 100 of them moving to the BRO, you can improve this probability by adding more factors. For example, you can do time frame correlation, as we have talked about in our previous live trading sessions. The last thing what I want to leave you with is another interesting thing that you can look at. Look at this open, look at this upper stretch line, okay? Now, once it crosses above that, like this red bar here, it crossed above that, but it retraces, isn't it? So for example, if you had a cross above the stretch line, but after that it rebounds back, okay? What we would do is don't enter the first breakout, wait for retracement, and then wait for resilience to come. That means to take out this high and then take the second point up. If you're confident, you can enter into the retracement. That will require a bit more research. All right, cool. I think I will leave you guys with this main points over here. The first thing what we looked at is the understanding of the stretch and BRO. Okay, that's the first thing we looked at. Second thing we looked at is why they are important, because once they move away from the open as far as possible, that is your true intraday trend indicator. The move from the open. How much does it move away from the open? Move away from opening price. Okay, you can do that any instrument. Doesn't matter whether it's currencies, commodities, indexes, it doesn't matter. Why is the move from the open your true trend indicator of an intraday? It's because once it has done that, it will tell you where the range is formed and if the opposite side is the stretch for the day. In this example, the stretch is to the bottom for today. Very low probability is going to take out the low. Next, how can we use it? One, you can use it as a simple breakout system. Once it takes out that, you enter and you can put a bit more details into it. If it closes above it, then you enter, not just on the first breakout. And another way to enter is don't enter on the first breakout, enter on the retracement and choose your technical levels to enter in. And you can do this on any time frame, 1 minute, 15 minute, 60 minute, 1 hour, 4 hour daily. But it will get very powerful if you correlate those time frames. All right. Okay, cool. So these are the three things that we looked at today. Do go and reflect on them and see how you can integrate it into your own trading strategy and see how you can improve your results and by integrating this kind of rules and tips that we are giving you here at Master the Markets. All right, so that's all for me for now. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.